everybody, and welcome to the Dash Trader Newsroom. How long will the markets continue to hold near the highs? Inflation is showing some signs of being on the rise once again. My name is Michael DeGioia. I'm the Director of Educational Services here at Dash Trader, and I'm joined by my co-host, Jill Malandrino, Global Markets Reporter at NASDAQ. Jill, how are you?
Good, doing great, Mike. Thank you.
Found a nice quiet corner there at the market site.
I did. Something's going on here today. So it's a little bit loud where we normally are.
That's why they call it the crossroads of the world.
Yes, they
Let's jump
do.
right in. Let's talk a little bit about the CPI and the WPI. But first, the NASDAQ and all major indices have been hitting new highs, making new high after new high. Question is will inflation damper the new highs? We got the WPI today, which was 0.6 in February, which was more than expected. And we can see that the CPI has been stair-stepping up pretty much every month since October. And we've kind of been hanging out here at the lows. You know, this is a failure to move lower often means that maybe you're going to go higher. So what do you see in your crystal ball there, Jill? We've been at the 4 months of gains.
Mhm.
Volatility seeping back in?
Yeah, it certainly is seeping back in to a certain extent. And we saw this a couple of weeks ago. I think we actually spoke about it last time I was on, that we're seeing the VIX and S&P moving higher at the same time. Same thing with the NASDAQ 100 and NASDAQ 100 related volatility indicators. And that was similar to also what we saw in December, where we got a little bit of volatility coming back in the market. To see them, equity and volatility indicators moving at the same time, that sometimes lets you know that traders may be on edge. I think what's interesting is you're seeing the market make new highs, not predicated on the Fed and what it's expected to do, right? We had, from a fundamental perspective, earnings were quite good. Where investors expected companies to beat, they did for the most part. So it really was more of a fundamental driven move than it was a macro move. Now that we're in that earnings vacuum and the market will be hyper-focused on what's happening with the Fed, inflation, I think fiscal policy is really coming into the calculus right now, which is no surprise considering we're, leaning into an election cycle. The market might become more predicated on what happens with the macro now that we are in that earnings vacuum. But I think the key here, the fact that we're moving higher with the lack of interest rate cuts, which was expected to boost the market, again, I think is a positive thing. Another thing that we're taking a look at as well is S&P versus S&P equal weight. And you're starting to see the divergent kind of come in a bit, not necessarily like, an all clear signal, but certainly breadth has widened out. Some of the concentration risk has come out. But as we see today, with the market being a bit lower, it always goes back to, oh, NVIDIA is down for the fourth day in a row. What does that mean? I'm returning over here. I'm not necessarily sure that is a trend make. I mean, you have to recognize that portfolio managers have parameters that they need to follow. It's more than just buying at the low, selling at the high. There is a formula that's involved with that. So perhaps there is some profit taking, and they're looking into other areas of the market to get in. Especially PMs that trade, using factors. There could be a certain percent up down that they need to get in and out of, or if they've made, a certain move to the upside. So there could be some sector rotation here, but I'm not sure.
Tremendous run on a stock like
right.
that.
I mean, fundamentally, nothing has changed. It's just, from a portfolio management perspective, a risk management perspective, I mean, there is some rotation that does occur. You're not just going to bench yourself to NVIDIA or have NVIDIA in your portfolio and then, that's how you're making your benchmark. It doesn't quite work like that. So, risk management over the long term is going to trump, a more near-term move. But for sure, there is volatility coming back into the market. And again, I just feel like it seems to be heightened when we're in that earnings vacuum.
Absolutely. All right. We're in the space between this earnings season and the next one. And then you have, certain, political, factors and risks coming into play here. You mentioned that we're in an election cycle, and probably this has something to do with the election cycle, is the U.S. House of Representatives wants BitDance to divest of TikTok. What is that, the impact on, for instance, Facebook, Meta? And it probably, we have the former Treasury Secretary also putting together a group to potentially buy it. What are your thoughts on the impact to technology overall, the social media sector, with this kind of political move to basically get BitDance to divest of TikTok? I think you're in the building. Isn't
We are.
NASDAQ in the building with TikTok?
TikTok is, I believe it is one floor underneath our most bottom floor. But this is interesting. I'm not thinking about it in terms of what this means for Meta or other social media stocks. I think the fact that the US government is telling a company to sell or divest, granted, it's not a US company, um, it makes you wonder if that could potentially open up a can of worms, because it's not typical that the US gets in and will make that kind of request. So I think not only from a political perspective is this kind of a hot button, but just how the government relates itself to business. So that's one thing I'm thinking about. Read another interesting article today when, people leave public life, right? So obviously, Secretary Mnuchin is not within the public sector anymore. Of course, they have a right to make money and enter the private sector. But I do think, just like, there needs to be more structural rules around public servants trading. I do think in terms of where public to private sector employees, where they insert themselves within the private sector. Really, what is the motivation for Mnuchin for buying it? We clearly he has political connections and so forth. And I just think that it's just such a gray line.
There is a
Really,
very, very gray line there.
what's the
Yeah, for sure.
motivation? Who are the investors? Following the money? And I don't mean it to sound conspiracy theory-ish, but I feel like, let's not call it parameters, let's call it guardrails, right? I just like, we want guardrails against how public servants can trade, just like Mike, you and I, well, especially for myself, I work for an exchange. We have trading restrictions. I think there needs to be some sort of restrictions, coming from such a high level cabinet position to now
Mhm.
buying or looking to buy a company where there is political tension with where it's domiciled. Um, it's just it was a bit surprising. Let's put it like that.
Let's say, I think corruption is a huge problem everywhere you look in the United States today. To me, I just think that corruption is rampant, and it's not being policed in a balanced way. Meaning that you and I, me being a financial perspective, professional, and you working for an exchange, we're policed. But if you go and you have way more power than we have, and you run for political office per se, and then you are no longer in political office, but you now have all those connections that you got while in political office. I think there should be some safeguards, right? It seems like
Right.
corruption is a problem we're dealing with everywhere in New York City, especially with Eric Adams and his administration. Certainly, seems like it's not just a problem that we're dealing with on the federal level.
Yeah, the I think with this deal in particular, it's going to be a case of follow the money, right? Um, Especially if sovereign wealth funds were to
Mm-hmm.
get involved with the deal, right? You could kind of read between the lines there. Um, that's why I think this is going to be really interesting to follow. I also, there were hearings in front of the Supreme Court a few weeks ago in terms of content moderation. Um, how does this work if you have a group of investors? They can't take the platform TikTok and just take it over and make it a US thing. It'll be shut down and they have to redesign it and so forth. But what does that mean for content moderation? Follow the money, right? Again, sovereign wealth funds, if it's coming
Mm-hmm.
from areas that have heavy political influence, will that influence content moderation? That takes you back to Section 230. First Amendment, not that First Amendment has anything to do with private companies, but that always gets thrown in there. So I think this is going to be really interesting to watch from a technical and political and legal perspective. And it's happening so fast. So I'm really curious to see how this plays out.
Absolutely, and that brings to mind the AI tech boom that we've just had, where AI has pretty much just, it was almost reminiscent of the internet tech bubble. And then sure enough, markets and Nvidia is hitting new high, and then the European Union comes out and passes the first bit of regulation regulating artificial intelligence. Certainly that is going to, I mean, in my opinion, I think that that's just the start. This is opening the door to regulation of artificial intelligence. It may actually be, a little bit late, in fact, that they are regulating artificial intelligence. But what are your thoughts on the European Union's AI regulation?
Well, it's interesting that you ask that. And as you know, on my show on Trade Talks, we have shifted from no more one-on-ones to we have all panel formats. So we have a panel coming up on EUIA.
Yep.
And what's interesting is because of the new format of the show, we bring on a lot of legal experts, academia, and policymakers, as well as regulators. So we get a really interesting mix of experts from different disciplines as it relates to what's happening with AI, social media, all the newer technologies. So that will be coming up shortly, not to plug it, but it just kind of felt right there.
No, 100% right.
I mean,
I'm
honestly,
going to tune in myself.
yeah, we have advisors to a number of the president's committees that are coming on to discuss this. We have a number of think tanks and a lot of academia that's coming on. I would say every single thing that we're covering, AI is brought into the conversation in some way. And Mike, as you know, when we started really covering it in November 2022, when ChatGPT became part of the regular vernacular, we took it as not what stocks have exposure to it, but we started covering it from the perspective of IP law, ethical and responsible use. Those are the longer term conversations around AI versus what stock has exposure to it when you think about it from our perspective. Clearly, there's a trade there, but that's not what we're covering. I think part of the challenge is, and this relates to Moore's law, which in so many words is, as technology evolves, it moves faster with each iteration. And regulators, even people in cybersecurity, risk management, and so forth, there has to be some back testing. There has to be, a philosophical understanding of what this is about. And I recognize businesses want to get their product and revenue lines out there and all that. That's one thing. And then you also have, how does AI contribute to false narratives and deep fakes and all that kind of stuff? So I think that's part of the challenge. Other part of the challenge is we're in an election year. And everything that happens here is a partisan issue. So I'd be surprised, based on conversations that we're having, if there's a lot of progress on that front this year as it stands. And I think we need to approach these issues like we are thinking about if Mnuchin and his investors buy TikTok. What does that mean from a regulatory and ethical process perspective?
Precedent. Yeah, it's setting a precedent, right? That now you leave office and you can put together a group of investors with your political connections that you got
Right.
from
And that's because there is no regulatory framework. There are no guardrails. And Mike, as you know, we cover digital assets as an example extensively. And really the inflection point, I would say, is the outliers have kind of been shaken out. I would say late 2022 to where we are now. The industry has matured. We're talking about market structure. We're talking about institutional adoption and more products like the ETFs. We're talking about regulation. The digital asset space wants regulation so that they can figure out how they can operate within a framework. And I would imagine that that's the approach that many in AI are taking as well. Let's hope in a Goldilocks world that's what that looks like.
Yeah, no, without a doubt. Those are some excellent points. And I think that what you're saying is that we're setting legal precedents, right? So every action that is taken opens the door potentially for similar actions. And that basically is what legal precedence is.
Right. But here's something that's really interesting. We did a panel last week with AI and human resources. I actually covered another one like that today, too. We had an EEOC commissioner on, which is an Equal Employment Opportunity Commission. So, this is a policymaker out of DC that joined us on the show. And for all intents and purposes, just like we think of Section 230 and how content moderation is done these days, even though AI is helping to improve EEOC mandates, and there's no formal AI legislation, laws still exist where you have to abide by, when it comes to equal opportunity, whether it's AI or humans making that decision. So you
Yes.
can't have an AI platform that you're employing as long as it's within the confines of the laws that are on the book.
Yep.
That's a big distinction to make. So even with content moderation, we can, um, it could be argued all day long, but if the platforms like Meta, like Twitter, are operating within the confines of the laws that are on the books, they're publishers are not content creators. These are
Yep.
all these nuances that need to be worked through.
Yeah, I mean, every time you get a new piece of technology, it has to, be looked at to see how it fits into the current regulatory structure. And that's a difficult thing to do, especially when we're all just starting to, we're all learning what we can actually use AI for. I know in my
Mhm.
own life, I'm using AI 2 or 3 times a day now, whereas you go back to 2022, I wasn't using it at all. It was like, oh, cool, Chat GPT. That's cool. But that
Yeah,
was
but the
it.
fact of the matter is, though, Mike, as you know, with especially financial services, is we've made a massive technological shift. AI is nothing new. Like it's been employed the past 10 to
But,
15 years,
yeah, I
but
mean, since 2005, at least it started black box trading.
right. Yeah, well, of course. So when you think of predictive technologies, when you think about, algos aren't the only thing that are proprietary and giving you an edge. AI has been around. It's just like you and I have been talking about. ChatGPT is within the consumer vernacular, but it's
Yeah,
not like AI itself is new to you guys.
with not in the financial markets. I mean, I back as early as 2005, 2006, I was working with programmers programming and trading systems.
Mhm.
Electronic algorithmic trading systems. So let's jump to the markets don't seem to be worried about the upcoming election, but we seem to be dealing with the reality of a 2020 election do-over. Maybe it just hasn't set in yet. What are your thoughts on, I mean, the market's just been going crazy, up and away, to the moon. What are your thoughts on the impact of the election? You think it just hasn't realized it yet?
I think it's still it's a it's a it's a little bit too soon. Um, you know, from an economic perspective, when you look at how markets have performed in an election year, it does. And again, this time is different. I know we don't like that saying. They haven't performed that bad, right? In fact, I don't have the exact numbers in front of me, but it's not like it's a major volatility event. Of course, there's going to be uncertainty going into the elections, and one thing I think we need to recognize is from a trading and investor perspective, now that social media and different AI applications are used for trading, or Reddit is a great example of how things move stocks. We didn't have these types of platforms even 2016, believe it or not. And I'm not normalizing craziness whatsoever, but the echo chambers are bigger than they were then. False information comes out all the time. Polls are being distributed all the time. And who's to say what's right? Even when it comes to data, it can be whatever outcome you're looking for, you can manipulate that data, which is a problem whether you're using AI or traditional academic data.
Yep.
So I think traders and investors are contending with that as well, trying to determine what's the most accurate, what's real information. Um, Even when calling elections, you could see something, someone could throw out there on Twitter at 8 o'clock at night. Um, Even CNN can do it. God forbid they get hacked or something, that so and so won. That kind of thing moves markets. And I think that's just another element that traders and investors are contending with trying to parse out what's real, what's not, what the implications can be. So it might be, a little bit more challenging this time around.
Without a doubt. I mean, I think it's all about interpretation and quality of data. We have so much data, like what data is pertinent, what data is not pertinent, what has impact. I mean, I always just, as a trader, I always looked at the price being the ultimate reality, right? So you don't know if the data is good or bad or real or not real, but if it's being impacted in the price, if it's going up, it's good, it's going down, it's bad. So price is as a trader, I always looked at price being the ultimate deciding factor.
Mhm.
But
I
you
mean,
bring out some amazing points. And it's a lot to interpret these days for sure.
yeah. I mean, Mike, look at, you know, I don't know a trader that doesn't use Twitter to access quick headlines or do research with or stick tickers in the
Absolutely.
search. You've seen it happen. A fake tweet goes out somewhere, whether
And
it's
boom,
right or wrong, it will
price
move.
impact immediately. Yep.
I will never forget. I think it was 2013 or 2014. There was a fake tweet that went out, and this is still when Twitter was kind of a little bit newish, if you will, that something had happened at the White House with Obama, and it moved the futures. It was in the
Yeah.
middle of the day. I was on my way to the doctor. I'm walking down Park Avenue, and I just I remember where I was, and that was so impactful because it was really the beginning when people were using this type of technology. Now it's kind of like there's almost an expectation that a fake tweet or something's going to be put out there, but
Yeah. Yeah.
it's impactful, and we've seen it to the point where there's identifiable moments where you remember where you were.
Yeah.
And each technology brings that on.
It certainly does. And it really, I mean, I just remember when the Trump, trial started, I was seeing like Trump, like running down the street, getting arrested. The AI was generating all these images. And, obviously it really does alter your mindset, right? I mean, there's like everything gets skewed. You don't know what to react to. Is it real? Is it not real? Then you got to go verify the source. So it does certainly change the way that we interpret data, because there is so much data out there, and computers can do so much that they couldn't do in the past.
Yep.
So you bring out some amazing points. Thank you so much, Jill. Great
All right.
show.
All right. See ya. I'll talk to
Have
you
a
soon. Take
great
care,
weekend.
Mike.
See you soon.
Thank you,
Bye
you
bye
too.
now. Let's jump to the charts. And before we do so, we are in the middle of our #1 best trader competition. It's in full swing. I believe tomorrow is the last day. If you have not traded yet, I don't think that there's too many people who haven't traded yet. But if you have not traded yet, you want to make sure that you start to trade and you get your trade on, because you can be disqualified if you don't trade halfway through the competition. But we got 15 days. We're halfway through the competition. Remember, the competition ends a little bit early this time, because because of the Good Friday holiday and the break for Easter. So it ends on a Thursday. But needless to say, let's jump right into the market analysis. I'm not going to beleaguer it for too long because Jill and I spent a lot of time talking today. All right, so here is my Dash Trader software, and as you can see, I'm just going to change this to my daily chart. Markets have been up and away. I mean, this was the key breakout point. We broke out at the end of the year, and we've been pretty much up and away ever since. That's on the S&P. Let's take a look at the QQQ. All right, QQQ. Basically QQQ represents the NASDAQ. It does look like we might be rolling over if we break below the 50 period moving average. But again, this is sort of a still could be a additional breakout to the upside. I also want to remind everybody that it is March 15th. So April 15th is tax day. You have a lot of inflows into the market to the long side as people do their last minute IRA contributions. So certainly that is a factor as well. Let's take a look at Apple, AAPL, because we used to say, so goes Apple, so goes the market. Apple down here at, key support at the 170 area. It's at 173.20. Let's bring up NVDA, NVIDIA, kind of holding its own after it made a bit of a profit-taking move. It's up, it's down. Question is will NVIDIA make another run and make the run for 1,000? But certainly all of this AI related legislation passing in the EU and other places might have an impact on that. But a massive run from 500, where, certainly people thought that 500 might be the top for NVIDIA, but now NVIDIA is all the way up here, at 880 with a high of 980. MSFT, Microsoft, still up and away from Microsoft. Microsoft is pretty much unstoppable, just had a breakout pattern. So Microsoft doing very, very well and indicating that the market might move higher based on the action of Microsoft. Let's take a look at GLD, which is very interesting because gold broke out. We've been talking about the old man as the dollar gets questioned. The old man, what money used to be measured against before the dollar. The dollar is weak, gold is strong. That's the inverse relationship, right? So certainly we see gold consolidating near the highs, let's go back on a weekly chart. This is an all-time high. or very near the all-time high on gold. This is the GLD gold ETF. GBTC, another hedge to the U.S. dollar, is a digital hedge, which is digital gold, Bitcoin, as tracked by GBTC, which obviously with the ETF, GBTC was an early ETF related to Bitcoin and cryptocurrency. But certainly that has shown some tremendous gains from $10 all the way up to $64, and now pulling back to 62. On that note, I'm going to switch back and wrap things up. Stay up to date with all things DAS by signing up for our monthly newsletter email. Simply fill out the form at the bottom of the webpage on www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Newsroom reminders. Follow us on social media on LinkedIn, Twitter, Facebook, and Instagram. Remember, number one best trader competitors. Got to trade before tomorrow. And of course, the competition ends on a Thursday due to the Easter and Good Friday holiday. Trade well, everybody. Have a wonderful weekend.